Good morning. It's Harvey Jackson. Just going to go through a quick thing or quick few news items, currency issues, and the renewable fuel guidance, the 45Z. There's some confusion there. But let's get into that. U.S. dollar is actually made up of a basket of its major traded commodities as an index. Euro is the largest, and then it breaks down from there. So here you can see where it's trading right around the 106 and a half. And as you can see, what does that look like when we look back farther? So you start looking at how that pairing with the other currencies, it does trade a little bit higher, but we are at the top end or higher end of the range. And that is actually a good thing when you look at how strong the US economy is relative to the rest of the world, but it's also saying the rest of the world's actually maybe in a bit of a problem as well. So Australia's economy continues to misfire, and you can see right here where that is in relation to where it's traded. If we were to draw a line in there, there's actually some issues there for sure. Rupee, which is your Indian currency, it's trading at lows, and you can see what that is trading now as well. And there's a reason why I put that line in there, because when you look at it in relative terms, they've actually had a lot more strength than where they currently reside as well on the currency. And yet that does not make up the part of the index, and it is one of the major trading partners that the U.S. Trades with as well. So this is the major pairing, and it has got some issues as well. As you can see, uh, we're trading just at 104, and when you start to look at where is that range, so it's been a fairly tight range for the last few years. Upper end at 110 or 111 down to 104, traded below that for short stints, but majority of the time it actually holds a fair bit of strength. Brazilian real has actually fallen from grace here as well, and it would look a lot like the rupee if I were to look at the farther term as well. Chinese uh, yuan, it's actually trading pretty weak as well, but it's still above this support line where it's hit a few times in the last few years, but their economy is actually running into some issues there as well, and they're not doing the productivity that they have seen in the past as well. Wheat has declined from supplies in southern hemisphere. Australia, Argentina are growing. Soybeans are having a hard time to trade at or above this $10 mark. You'll see that on the charts. And this is where the confusion came. And I just picked an article that actually kind of quoted both sides of this. So Bloomberg and Reuters both published competing stories yesterday. One was saying that there's not going to be guidance, and one will be guidance by the end of the year for the 45Z credit, which is basically the formula figuring out the calculation of the renewable fuel standard. Now, I won't get into the details of that, but um, it's just because there's no guidance for such a long time, you actually have producers that are kind of pulled away from building or even uh, you know, continuing the pace of the build for the renewable fuel crush plants. So another article that kind of hit the top of the news was some of this EU agrees to delay the deforestation. I think that's just a matter of fact. They already agreed or said that they were going to do this back in October, and that's what's given the palm oil all of a sudden a little bit of surgence of price. And I think that also helped the Europeans to be able to secure some supply. India secured some supply, even though they're not part of this deforestation Green Deal kind of thing, stop the deforestation. Let's just get into the markets here. Canola's down not quite $5. European rapeseed's down 4.25. Everything's pretty much down, and we'll just look at them individually here right away. So here we are. Canola's got that little leg up and a little bit of a pause right around the 23.6 on the upward retracement, not above the 78.6 on the downward from the bigger move. But you're looking like possibly you can get a little bit of strength here from your slow stochastics as well. Your rapeseed, it's got that leg up as well, but a little bit bigger move. It's moved into the 50% retrace value from its move down. And $189 differential right now, which is pretty amazing when you look at where that is relative to the pairing of the front months, and it's not been there. It's had some higher values, but it's never been this high. So if anything, it's going to find some export destinations, I would think, canola. But we'll have to see when that shows up in the export. The export pace for canola has been phenomenal. Now you put a little bit more pressure on the differential between the European price and the Canadian canola price, and I think that might add some more pressure. Um, Soybean oil really doing nothing, still trading above the 23.6 retracement value and trading right at some of the longer and shorter term moving averages. Not peaking above the 20% on the slow stochastics either. So not quite giving us any strength there. So here's your palm oil and trading above the 5,000 ringgit. It made a high yesterday and trading today, but it's down at the moment, and we'll see if that can add some strength as the market trades forward a little bit. Crude oil is basically in this wedge now at the top end of the wedge there right as we speak. So if it breaks out, we'll have to see, but it's still a pretty tight trading range, and if anything, it's pretty good for the world economy not having really high crude oil prices. Soybeans, we're at the bottom end of the range, and if you extend this out a little wee bit here, you can see how that's come from in the 17s, 16s, 15s, and now we're trading sub 10. And right here, this is where the trade war was. And if we look at this line, it's actually hit the top ends of that line. So if we are in a different paradigm of trading, um, are we going to be using maybe this as a trading range because of higher costs? I don't know, but I would like to see that this is maybe the bottom end of the soybean trading range with some upside, and that would give us some support in our other oil seeds as well. But it's probably not a coincidence that these bottoms that we're making right now is the tops of the past trade war that we were part of indirectly. Canadian dollar low, and just where was that? So you can see here's your pandemic, here's your uh, oil going to negative, or your and then uh, your trade war back there. Oh no, your trade war's not even in here. So sorry, this is when we had a lot of problems with the Canadian economy as well. So we want to stay above this line so that we can actually be a relatively good partner to the U.S. in trade. Let's have a look at the wheat. Just saying that this is going down. Need to bounce off of this support here, and still not looking too strong at all. Here's your spring wheat for the forward month. Still looking at some higher values up here if we can ever get some recovery. Uh, Chicago wheat does not look a whole lot rosier than Kansas or than Minneapolis. Here's your Kansas, and here you can see that it's actually in that downward slope as well. Milling wheat held up a little bit, but it's still not in the trading range that we would like to see. Here's your corn, basically in a wedge and narrowing its trading range as we speak. Tomorrow, StatsCan, so 7:30 we'll maybe have a look at that, and next week we'll be talking about the USDA. So hopefully some of those numbers are actually going to be giving us some support, and we'll chat with you again tomorrow.